Hey, thanks for tuning in. This is a weekend review for the week ending May 6th, 2022. We're looking at a weekly chart of the S&P 500, and not much has changed in the 2 weeks since I've done my last video. This pattern that you're looking at on the weekly chart is still in play. I can draw this a few different ways, right? We can maybe move the A leg down to here using the January 24 low. It doesn't really matter. The reality is that the momentum is increasing to the downside. Our ADX is above 30, which is telling me trend mode is engaged. I have two different things I look at all the time to help give me an idea of what the momentum looks like. I've got a few things, right? I'll just go over them right now with you, right? We're below EMA 5. That's in the bear camp. The 5 is crossed below the 10. That's in the bear camp. Now, I will say it did just cross above for the bulls, but that was a trap. It was a retest of the 20. It was a fail. And now we're headed lower 5 weeks in a row. Another outside bearish reversal candle, but you do have a doji. So we've got the bands at the bottom are pointing down. We do have increasing bear volume as we've gone lower. There's not a lot to talk about that's bullish here. We just had the SMA 20 cross below the 40. So everything that I like to use from a swing trading standpoint is telling me that the bears are obviously in control. This is nothing that should be news to anyone watching this video. That being said, let's drill in a little bit more into the daily chart and even the hourly chart to see what it is that we're looking at. There's a few different ways I can draw this one. So we'll just assume that the low from February and the invasion is the low. So, for the A leg, that is. So let's take a look at the daily. And it's starting to get real messy. So we're going to clear up this chart. We'll show the momentum here is maintaining some level of divergence, but the reality is since the 5 crossed below the 10 and the 12 crossed below the 26, which is what this PPO is showing, it's been trend mode full on. The bear's been in complete control. What that means is on any given day, if you see a rally on the hourly chart, you can sell it. That's what it means. Now, that being said, we've been in this environment for 1 month and 1 week. Now, if you look at this first move lower, it was 1 month and 3 weeks. So it's entirely possible that this has to go further into OPEX, the third Friday of the month. Definitely on the table. That being said, it's not going to go in a straight line. So we got to look at this chart for some structure. When I start to look at this, I see a clear 1, 2, 3, 4, and we're looking for the 5 right now. Each of these waves is getting longer, so you could, when determining and trying to project what a wave 5 is going to look like in time, it can look like wave 1, so it's like exactly the same as wave 1. It can be the smallest wave, or it can be the largest wave. That's basically it. Those are the 3. In this instance, if it looks like wave 1, it's about done. And if it's the longest wave, we're coming down here to 380. And just as I zoom into the hourly, right, we've got this same type of structure here. The fibs confirm we're getting this divergence, and the bears, the ADX is showing that there isn't even an hourly downtrend anymore. I know we're below all the moving averages, but this thing couldn't get above 30 going back really to May 4th and really May 2nd. So since this downtrend ended, which was on lower momentum than the previous, which is what this divergence is showing, right? Waning momentum, even though price is going lower. So yeah, we just need to see this chart if it's going to hold this momentum or not by Tuesday, if it's going to flip up and break this or not, because this is a bullish momentum, right? You've got a lower low in price, but a higher low in momentum. That is bullish. And a structure standpoint is telling me that, hey, we got a doji on Friday with some volume behind it. The bulls didn't close below 410. They could have. They were there all week, right? If you look at the weekly, brought this one up this level here, 410.64. What was the close on the week? 411.34. Could have closed below. They didn't. And from just a fib standpoint of the move going back to the COVID lows, there's a few ways we can draw this one. It doesn't really matter, right? Where 5 is the shortest, like we talked about. We got to get back to 380. I mean, everywhere I look, it's like we got to go to 380. And it's not going to get there in a straight line. It's probably going to get there in the next 2 weeks, though, I'll tell you that. And we're in this channel heading lower, right? And right now, we're not at the bottom of the channel, right? No matter how I draw this channel, I can draw it like this. If I do that, we're closer to the bottom. If I do it like this, going off of here, you could assume something like this is in play and the channel's way lower. But the reality is, when I start to look at the momentum on every time frame, it's absolutely destroyed, right? And pointing down. I will say this is in the bull note category, right? We've kind of hit a trough here. This is generally what happens during the pullbacks. You get ADX to come all the way back down to pretty much zero. Well, ADX is at zero on this move lower. I'm not you go back to 2009, right? Look at what was happening as the move went lower. ADX was increasing. So this isn't 2008. It's obviously not the same thing, right? Now, if price encloses below the 20 this month, ADX flips up, accelerates for the 4. You know what I'm saying? Like, that's a different environment than what we have right now. I will say that this momentum has certainly gone straight down for a year. Every month's momentum has been less than the month before. And structurally speaking, there's no reason to say that this didn't happen, some ABC like that, or some big triangle, broadening formation, whatever, right? Doesn't really matter from where I sit. This looks like a 5-wave move, and we need to correct. We need to correct that in time, something like that. And if this is a wave 4, then the 382 is fine. If this is a wave 2, right, and this is some big, 1, 2, which I'm not in the camp it is. I'm in the camp that everything from way back here is being corrected. And if that's the case, like, even these levels could be on the table. But that's so far away. What would end up happening is something like this, and then you'd see the move down in some very large 3, 3, 5 corrective pattern. That's so far away, we can't think like that. Regardless, the daily is showing us right now that we've got a downward pressure environment. Trend mode, no doubt, is engaged. But that being said, she's already moved 6 weeks in a row, 5 weeks in a row, and is a bit extended from the 20. Right, and didn't close below the band. So the way it works, and the reason I like having these bands on here, is that if the market's going to move, they're going to close outside the band. It's just how it works every time. Right? They come in here, they come down and put in a low back in December, didn't close below the band. Closed below the band for 1 day, got back inside, went back to the middle. Got to the bottom, went back to the top. Right? Got below the bottom, and that's when the move happens. That's the breakout, right? Because the bands are just telling you what's happening 95% of the time. Right? Anything inside the bands, that's the 95%. If you're outside the bands, that's telling you something else is going on. Okay, we don't have that here. We don't have it on the weekly. Right? They could have closed below this band. They could have closed below 4.7. They didn't. They did back here on May 7th. That could have set up a waterfall decline, and the bulls put in a 2-up candle here where they closed above the previous candle high and back inside the band, back to the 20. So I think that's what's likely, most likely here, if this level 410 continues to hold. They give up 410, then 400 and all these gaps are on, in play. And we've showed these gaps before. We'll go back and show them again one more time. Gap right there, gap right there, gap right there. Right, hourly gap down here at 381. Big gaps all the way down here at 330. Right, remember all these gaps? Like those gaps are going to get filled, guys. All right, and at this rate, they're probably not going to get filled until way later in the year. Again, we could have a year that literally is something like this, just like we had back here. Some big correction that's taking place over the course of 2 years, right? This is a huge correction that took place over the course of 2 years, 2018 to 2020. Big one. It didn't go just straight down, okay? Right? That's basically what we've done right now. We've gone straight down, but we've had what is an ABC up. So this has reloaded the gun on a short-term time frame. From a monthly standpoint, though, we don't have that. Back here, see, you've got this monthly ABC. Right now, we're just coming in off the high, trying to put in an ABC, which here's the thing. Let's clear up all this, take everything off the chart. Just look at the candles for a second. For symmetry of this pattern, right, what do we want? Either get above 419 and tell us it's over, get down to 392 by next month, 2 down, 1 up, 2 down, get above it this month. I'm looking for it to end this month. That's what I see. This is a monthly ABC. It's already technically completed, and can go as low as 376. If this turns into a 5-wave move, and this is really a 1, and this is your 3-way down here, then that's what it's going to look like. And then you're going to see something like this, and then another one lower, and what would be a 2 to 3 year bear market. Way, way too early to tell if that's the case. All I can tell you right now is this is what we're looking at. I'm not going to beat up SPY anymore. We've just spent 13 minutes of my 20-minute video on SPY, so we're going to move on. So we'll take a look at QQQ. And the reason we spend so much time on SPY is because they're all the same. Every single one of these charts that we're about to look at is exactly the same. Here's your monthly on QQQ, 276, stone cold buy. It's the bottom of the bands. I will say, that looks like what we're going to get. If you zoom in a little bit more, right? Didn't close below the bottom of the band. Did not. Yeah, 287 definitely in play. But I will say that they're not going to give up this 300 level so quickly. Yeah, and this is a lot of volume that came in. Close at low on week, not a good look. And you look at the daily chart, this is, again, trend mode down, but you do have this divergence here. It may hold, it may not. ADX is telling me that with each push lower, the bears are getting more tired. That's also what this divergence is showing. But that being said, bands are pointing down. Below a 20, 20's below the 40, we're all below the 200, 5 cross below the 10, 12 cross below the 26. This is in a full-blown downtrend. There's nothing to do here until the trend reverses. And this can stay in this configuration a lot longer than most people think. Let's look at IWM. They're a little bit different, but not really. So what I mean by different, that looks like a 5-wave move lower to me. It's kind of hard to view it any other way. ABC up, right? This was a flat. This was a zigzag, so they alternated. I mean, this looks like a 5-wave move lower, right? 1, 2, 3, 4. We're looking for this to complete. We should be on wave 5. And you start to see here wave 3 and wave 5 lows do have divergence, which you kind of want to see. So all this is starting to kind of line up. If you start to pull in some fibs, right, it's possible. Ooh, where are we here? There we go. Right, or no, 1, 2, 3, 4, right? Now let's just put that guy right there on the key pivot. It's possible this thing's got to hit 178 to complete this 1, 2, 3, 4, 5. It also could just be hitting wave 3 of wave 5 if that happens. Again, if I draw wave 1 up here, then we've already had wave 3, and it looks more something like, you know, this. Again, I don't know how much I like that. Right, this low here, 205, 204. So technically they don't overlap. That could be your 1, 2, 1, 2, 3, 4, 3, 4, 5. Working on the 5 now. Some extended 5. I don't know. It's all subjective. What is objective is that price is below a declining 5. The 5 is below the 10, the 20, the 40, and the 200. This is a full-blown bear configuration. It can remain in this configuration a lot longer than most people think. So let's zoom out to the monthly to figure out what the hell's going on. This PPO is at 4. Okay, it was at 11. When it gets back down here to 0, I do believe it is going to signal the end, especially the closer we get to the bottom of this band. Again, the things that I look for on all these time frames, right, is EMA 5 below the 10. Yes, so we do have a short-term bear trend on the monthly, but the bands are pointing up. All of the moving averages are pointing up. The 200 is below the 40. Everything is in a full-blown bull configuration here. And what I will say is that any freaking dip, and I'm telling you right now, any dip into this zone, and I know it seems like a lot. If you're playing a triple leveraged ETF, it will be. But if you are managing just IWM, as soon as you get into the 173 range, you start buying. 175, you start buying. And you add all the way down to 153. Now, I started buying this here, this 180 level. Again, I've been accumulating positively correlated IWM assets. I don't own any IWM. I don't own any TNA. I don't own any Qs. I don't own any SPY. Right? I'm looking at, I do have some SMH, some SOXL. I'm looking at accumulating that. And let's take a look at SMH here for a second. Right? Same setup. These to me look the worst. But they're coming into these levels where you haven't seen price in a long time. And like, look what happened here. This was your A leg of the correction. PPO had reset from 15 to 6. We've gone from 20 to 10 without a bounce on the monthly time frame. There has not been a bounce here. Just to give context, and the trend is up. Okay, there's no bounce, but the trend is up. What does that mean? Price is going to come down and set a low, and then it's going to go try to set a higher high. Right now, all we've done is break the higher low pattern. So if the bulls want to really, if the bears really want to prove it, they have to come put in a B leg and then put in your monthly ABC. We don't have a monthly ABC over here. That's just not what I see. Right here, we do. In fact, it looks like we have a 5-wave move lower here, like I've been pointing out. Now, that could be wrong. It could just be this. All subjective stuff. 177 is a target. 155 is the second target. Again, this is the accumulation zone. And price could be heading all the way back to 155 on IWM. And from close on Friday, that's 16% further down. But giving you some context, that would mean that IWM is going to correct 37%. She's already corrected 26. And again, I believe we're here. This is where I believe we are. That's it, right? And we've already done that. This is what we've just done. Okay? Now we need to do this. Before, again, all of these fibs make sense, and we'll wrap up here in a little bit because I know we're a little long already. All these fibs make sense, right? This was the 1, 2, 3, 6. This is your ABC correction. It's a 3, 3, 5. Again, monthly corrections hurt. They hurt the most. And that's what you're going through right now. And when this ends, the bull market that will come after this will be just like this. I'm not going to say it's as long as this. I mean, this was a hell of a move. But look at what happened after each of these corrections. You know, here's a correction. Here's a correction. Steeper correction, right? And we've corrected this whole move. In my opinion, this thing has already corrected. Like, where SPY is different, IWM is not. Let me show you what I'm talking about real quick, and then we'll wrap this video up. So something like this can easily be drawn. 5-wave move. Doesn't really matter how you draw that move, right? Doesn't matter if this is the 1, this is the 2, this is the 1, this is none of that matters, right? Because you put the fib up and you correct the whole thing, you've already done a 50% correction. And so every wave 2 is required to have a 50% correction. And more importantly, this here is overlapping this structure here. So we are correcting this move. The same people that were in here threw in the towel here. Now we're pulling back. All right. So we put in this 5-wave move. Now you're on 2. And so it is entirely possible, and I'm not saying this is what's coming, that this is what's winding up right now. And if you put in a 50% correction back into this happy zone that we keep talking about buyers, right? Anywhere in here down to 170, anywhere in there, if they do another 50% correction, this is now poised to project up to 411. Without the correction, you're not loading the gun. You need to frustrate all market participants, and the way you do that is an ABC, right? You need to go down, you need to go up, and then you need to go down again, or you need to go up, down, up, right? You got to give them the 3 moves, and if you know it's just a straight line, it's generally because they just completed a 3-wave move. And so that's kind of what I'm looking at here on the Russell, and I will say, like, this is a stone cold buy. Like, this isn't a sell. The closer you get to 170, the stronger a buy it is. And I am absolutely okay, saying that. It's also saying that it can go down to 150. Again, I'm not saying or recommending anyone go out and buy IWM on Monday. I'm saying as price falls in, it's possible that she rallies here at 176. It's possible that this move here is a 5. We're going to put in a 3. And then we're going to get the 5 later, right? Because again, after a 5-wave move, you want to see a 5-3-5 down, a zigzag. This is what I am currently seeing as the high probability bet. And sometime next year, sometime after the midterms, you're going to see the C leg, right? And it's going to be based on something. Who knows? And we have to talk about TNX. And I know we're already at 24 minutes, but let's talk about TNX. So start of the year, what did TNX do? Broke out. Ever since TNX has broken out, the entire market is collapsing. All right, so now at a monthly standpoint, we have a bearish divergence. Is that going to hold or is that going to change? ADX bearish divergence on the weekly, right? The monthly is parabolic, has gone straight up without a pullback, 150%. Straight up without a pullback, 150% into a rising, into a declining 200. Now, what I said earlier in the video, right? Close outside the band, and that's telling you something strange is about to happen. They closed outside the band and still outside the band for 3 months. I'm just telling you, this is very rare behavior. What's normally going to happen from here is something like this. A massive correction back to the 20. Because right now, I mean, go back in time and show me any other period. Just go back. Show me any other period where they go outside the bands for 4 months in a row. Go look. You show me. Here's TNX. Here's every environment, every macro environment that people want to say has never happened before or can't ever happen. Here they are. Okay, back in 82. 1, 2, 3 months outside the band and then ripped right back to the 20. That's what happens, man. It's called mean reversion, right? Things get overdone and then they revert to the mean. And then what did that do? That was the start of the move. You revert back up to the mean, and then you put in another one. You revert back up to the mean, then you put in another one. It's just how this thing works. That's what trends are. It's not straight up. It's up over time. Okay, well, what have we done here on a monthly time frame? We've literally gone straight up for 3 months. Not to mention a 150% decline in 5 bars and a 700% run in 2.5 years. So what I'm looking at is, well, what's going on here? There's obviously going to be supply somewhere, and there's going to be a pullback at some point. The question is, what's the destination? Now, you don't need to predict. You can go watch. I'll show you how, I'll tell you exactly how to identify when this is done. We're looking for it to end here very soon. So you go into the daily. What do we have here? Well, this is the highest point in momentum right here. Okay, so now we need a bearish divergence on the daily. Well, guess what? That's exactly what we already have. We already have that. We have a rising wedge that has run out of room. We're out of room. All right, we can do this. We can do this for a little bit longer, but they're not going to go up any higher than that. This is it. They're going to pull back and then rally. That's just how this stuff always works. So again, this is where, from where I sit, this thing has already been putting in the hourly bearish divergences going back to March. On the daily time frame, it just flipped. On the weekly time frame, it's already been flipped. And on the monthly time frame, it's this broadening formation, which means you're going to have PPO go a higher, 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 but ADX won't. And look, I can show you this. CGC did this. Same thing happened here. But it was on the weekly where you saw it. Right, look at this PPO back here. Higher PPO here than you had this high here. Didn't mean anything. Right? You didn't need a divergence to come set a new low. All right? You don't need that stuff. So let's wrap it up with bonds, because this is what's the inverse of that other bet. This is how I see this playing out. Honestly, from a fib standpoint, I really can't tell. I could say that's real. So, you know, that looks like a zigzag to me. That looks like a pattern we see all the time. Looks like it's about to complete down here at 108. So that's from where I sit, right? I'd much rather be buying TLT than buying TNX. And I know everyone wants to talk about XLE and everything else that's happening here. Okay, well, still above the top of the band, but remember, 1, 2, 3 months outside the top of the band, came back inside, now trying to get back out again. 4. Okay. How long are you going to close outside the top of the band before you pull back to the orange line? Just the orange line, guys. Just the orange line. That's all. Right? I'm not predicting a crash. Just pull back to the orange line, pull back to the green line. Same thing happened here. Big move down, pull back to the orange and green. Right? This move here, though, you pull back to the green, you pull back to the orange. Look at it. It happens all the time. All the time. But look how long it went on for. 6 years. So if this thing just mirror images that, then XLE could go to 105 by 2026. Definitely possible on XLE. And what looks like here to me is an ABC just completed. Something like that. But again, the divergences continue. The structure is poor. The trend has broken, right? You were on this line for 3 times. Again, even if they get a new high, will it sustain above here? I mean, look, maybe she's about to rip face again. Again, I don't know. What I'm telling you though is that the weekly buy was here. If you want to try to get in at 78. The closer, like this low here was like right at the 20, so your risk level was pretty good. But look, you got a bearish cross here, a bear cross. Okay, maybe you're never allowed to have a bear cross on this, right? During inflationary times. Okay, maybe that's what it is. I don't know. I'm just telling you, we have one now. XLE just put in a bear cross. That is a fact. It happened, and now is putting in bearish divergences. And again, where has she come from? She came from all the way down here. Okay, so maybe this is some big accumulation thing like we were talking about. And we are going up to 130, 115, 130. Okay. Upside of about 38%. Downside of about 18. 2 to 1. Not bad. Not bad at all. Right? I mean, if things revert back in a really, really bad case to the 200, it's a 1 to 1. But, this is the strongest sector. So if I don't talk about it, you'd be missing out. I know we're long in the tooth here, and all we did was talk about the majors. Apologies, Bitcoin fans. We'll catch you in the next video. If you like the content, hit the like button, subscribe, share the video, and we'll see you in the next one.